With the inflation data released yesterday, analysts are predicting a drop in Kenyan Bank profits, citing falling lending rates, which have led to a slower uptake of loans and the upcoming polls in March contributing to the slow growth for the banks. Now, joining us from our studios in Nairobi to take a look at the growth of the Kenyan banks is George Bodo. He's the head of financials desk at Bank. A very good afternoon to you, George. Now, first of all, let's start off with the credit numbers in quarter three. What did you make of those numbers that came out?
I think, in my view, that the quarter three credit numbers were quite devastating in my view, because let me just give a brief overview of what happened. The private sector credit in the month of quarter three went only up by 1.5% quarter on quarter. Actually, on a year-on-year basis, so just slightly under 8%. Domestic credit, which is the overall lending in the sector, went only up below 2% quarter on quarter. Now, if you look at such numbers, actually, further, if you sectorize the numbers, you realize that the top 5 sectors that contribute almost 80% to the lending basket, the lending to those top 5 sectors only grew by 1% on average terms. Mm-hmm. And I'm talking about the personal and secured lending, trade area, manufacturing, agriculture, and then real estate. These are the core sectors that consume banking sector credit in this economy. And on average terms, these 5 sectors went up, credit to these 5 sectors went up 1% on average terms. Now, if you look at more specifically, if you look at the private sector lending, it was only up 2% on a quarter-on-quarter basis. Now, last year, this time, credit growth, the personal and secured lending was up 6.3%. Now, compare that with the sub 2% numbers we had this year. It just tells you that there is the lending market in this country, in this economy, is having issues to do with the demand side. There's a lot of demand side constraint, and this is all to do with the pricing, because and you can trace the pricing problems to the central bank's restrictionary monetary standard. We can trace back in December last year. So this is an fill effect. You know, it's finally trickling in the economy, and you look at those quarter three credit numbers. It shows you that there is demand constraints.
So demand constraints. So look, if you're looking into the fourth quarter, are we likely to see the same trend coming through for this time around?
I think traditionally fourth quarter has been a slow quarter, especially for this sector. It's a quarter that generally the lending business slows down. So in my view, I project even further slow quarter four, and so this feeds into the fact that we are still going to see sub 10% growth rates in the bank's bottom line, both bottom line and top line. So it's still going to be a grim picture in quarter four.